Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and it's a mixed day of trade. The strength from yesterday for India might help. The global cues aren't the most optimistic, but sideways, if you will. Let's try and dissect them all one by one. Now, the U.S. markets came off in trade yesterday. They were maybe doing okay, and then a sudden drop down, as you can see, for FTSE CAC, rather Dow, Nasdaq, and the S&P 500, and all of that was a result of this particular thing. It's a story, of course, that everybody knows about, but it's there on the BloombergQuint website in case you want to read about it. Joe Biden, president of the US, is eyeing a tax rate as high as 43.4% in the next economic package. Now, remember, there are two ways to look at it. I think the person who doesn't believe this is a threat will tell you that all of this is known and therefore will not have a prolonged impact on the market. The skeptic will tell you that even if it is known, when it does actually get implemented, if it does get implemented, it will have repercussions. And it could, right? I mean, if there are higher tax rates, then a lot of people who are sitting on some capital gains, instead of paying a higher tax later on, if they're anyways believing that they'll be short-term gainers, they will in some fashion book profits or otherwise. That's what almost all stories on all websites seems to suggest. I'm not an expert on the US trader fraternity, but I'm essentially giving you a summation of what I've read on the 3 or 4 websites that I've read early this morning. So that seems to be the long and short of it. Is it having a ripple effect on Asia? Maybe not. Maybe some of the Asian screen is in the red, but not all. And in fact, the US futures are trading with a mild tick of green, by the way. So it's not all that bad in Asia. You would suspect that the markets would have come off, but no, they haven't. Now, if Europe starts off lower, because European markets did flattish yesterday, then you might have a bit of an issue for India. But otherwise, it's looking okay. The SGX Nifty, in fact, the last time that I checked, was marginally in the green, about 1/3% or thereabouts in the green. So kind of, yeah, that's it was in the green at some point of time. Currently, about 1/3% in the red. Okay. So it's very choppy in that sense. Let's just wait and watch how it opens up. The trade setup for today, therefore, is pretty important. Now, mind you, which is why I was saying yesterday, right? I was a big proponent of how the contra long trade in yesterday's session will work. It did work, and in fact, the stage is not bad for the contra long trade to work. But I think the global mood may drag the headline indices lower. I think the bank Nifty ended at the highest point yesterday, and that is the key variable. If the banks continue to do well, then there might be a fighting chance for our index to fight it out in the session today. And I think PSU banks, having not participated, but the charts, the derivative positions all looking pretty strong, it might well turn out to be the day for the PSU banks. I still think technology and metal sectors remain in focus today. We have had a couple of mid-sized tech names come out with numbers which were good. HCL Tech comes out today, Tech Mahindra early next week. So you'll be done with most of the earnings, and then the focus shifts to outlook completely. So I think tech remains firmly in focus in the next couple of days. The stocks have been beaten down. You never know, that could be a day for bounce as well. Just keep in mind, the overarching risk for India, aside of everything else, is that our cases have continued to rise, and even the RBI official, the MPC minutes show that the committee is worried about the impact of COVID second wave on growth. The first wave, it got digested. We came back, and the mood was that we will recover. Somehow there might be issues around that, and even the MPC seems to be believing that. So it's wonderful to read about what MPC is thinking of, and you might want to do that again. There are enough stories everywhere, also there on our website. What about specific stocks to monitor in the session today? I think that's the key thing. So a lot of earnings. There is Industar, which I'm not speaking about, but some of the others are interesting. So actually, let me first, just before I get to stocks to watch, excuse me, I just missed out. The earnings that come out today, like I said, HCL Tech comes out with numbers. The non-Nifty names, the likes of GNA Axle, M&M Financial, and Wendt could be interesting. And M&M Financial in particular would be a very interesting set of numbers to monitor in the session. rural that didn't have pain until now, but it seems that rural is starting to feel the pinch, and that might come and hurt M&M Financial in its commentary maybe. So the commentary from Mahindra and Mahindra Financial and Ramesh Iyer would be very, very important. Don't trade M&M Financial on the basis of only its numbers. Its outlook and the commentary that it gives would be vital for the company. Okay, now the stocks to watch in the session today. Tata Elxsi, like I said, IT, couple of companies came out with numbers. This is Tata Elxsi, and I think the numbers look pretty decent on a quarter-on-quarter basis. 9% revenue growth, 9% profit growth for Tata Elxsi. EBITDA up 17%, with margins at about 32.4% versus 30.1%. They have done exceptionally well in a quarter when most companies have struggled with EBITDA margins because of wage costs, etc. Tata Elxsi has come out smelling like roses. So pretty strong going there. Growth was led by America as well as India. Europe was lagging, but probably with reason. But 21% growth in NA and India is pretty strong for the company. Do watch out for Tata Elxsi in the session today. And do watch out for Cyient. Now, the reason why I'm telling you to watch out is that if you look at the numbers optically, you may think that they don't inspire much confidence, especially because both on the EBIT as well as the net profit front, the numbers were slightly below estimates, even if on the revenue front, the numbers were above estimates. But the good part for Tata Cyient is that people are pretty enthused by the commentary, and they do believe that even if the headline numbers have looked slightly patchy, compared to estimates, they've not been bad. So Morgan Stanley, for example, said that Q4 was ahead of their estimates, and the detailed outlook for FY22 from the company is constructive. They believe that they value the stock at an implied PE of 15 times FY23, and therefore they are staying overweight. The target price has been raised to 700. Yes, there is not much difference between the target price and the current price, but all I'm saying is that in Cyient, you might do well not to just simply go out trading because of the headline misses, because the headline numbers were slightly better than what people were estimating, and most brokerages believe that the outlook is constructive. I read another brokerage as well which said the same thing, so to say. So do watch out for Cyient. It might actually not have that bad a day as you would want to believe when you look at the headline numbers. So do watch out for that. Jindal Stainless could be in focus. Cohesion MK Best Ideas Subtrust, which is I think a Madhukela entity, bought about 0.62% stake of the company at 75.55 rupees per share. Kotak Special Situations Fund was the seller. So they sold out a large chunk, or a reasonably large chunk. Out of that, some HNIs would have bought in. I think this Madhukela entity was probably one of them. JSL could be in focus. Also, a small cap stock which has had a terrific run, Nureka. It's actually a micro cap or small cap, whatever, 1,100 crores. It's now of the short-term ASM framework. So maybe took a bit of a pause, but has had a fabulous run. And now there's a technical trigger out of the ASM framework as well. Do watch out for Nureka in the session today. And lastly, do watch out for some of these companies which had a fairly decent price volume action. Sugar is right in the thick of things, viewers. Keep that sector firmly in focus. The news flow surrounding sugar is very, very strong, which is why probably Balrampur saw this. But aside of Balrampur, Indocount Industries, textile company, ICICI Securities, after the numbers that they gave, pretty strong show, 6% higher. And Dish TV, I mean, I don't quite really know about the fundamentals of Dish TV anymore, but it did well, so I'm just bringing it up. But ISEC, the two names at the bottom of your screen, ICICI Securities and Balrampur Chini Mills, both of these very, very interesting as companies. By the way, just a second, Vikas Khemani, a guest who was with us on the show 2 days back of Carnelian Capital, yesterday or day before, put out a trivia. Since ISEC did very well, I'll just tell you some parameters about it. This is Vikas's findings, of course, that the company has had a last 5 years revenue CAGR of 18%, PAT CAGR of 35%, and ROE, dividend CAGR of 34%, and ROE is consistently around the 50% mark. So maybe that's why people do like ICICI Securities. Their outlook for FY22 or FY21 was not as robust, understandably so. So you have to bear that in mind, and the stock has had a bit of a run, but brokerages are in focus, and therefore this plus CDSL, CAMS, all of them should firmly remain on investors' radar. Dips could well be bought into. Well, so that's the long and short of the trade setup today. Do watch out for Indus Towers, Tata Elxsi and Cyient on the results front. Do watch out for Jindal Stainless. Do watch out for sugar. And I think personally, do watch out for the tech companies as well as PSU banks. I think will be firmly focused today. Thanks so much for tuning into the Trade Setup. And please, all of us in India, tell yourself and tell everybody around you, wear your masks and stay safe.